Let's welcome in Siddhartha Khemka, Head of Research and Wealth Management at Motilal Oswal Financial Services. Sid, good morning. Good to have you in. So where do we start? Let's start with Thermax, actually. I wonder what you think of this call that's coming through, because Thermax and some of these industrial stocks, they've completely fallen out of favor. Is there any merit in looking at Thermax now?
Good morning. First of all, I would like to wish CNBC-TV18, the entire team, congratulations on completing 26 years of outstanding service.
Thank you.
In the business, news, and financial education, and wishing the entire team continued success.
Thank
and
you.
more milestones ahead. So coming back to Max, yes, I think if you look at the entire capital goods space, the steam has definitely come down, but there is a big divergence in some of the companies. While the L&Ts and Cummins continue to deliver, Thermax has seen a weak Q3, revenue declining 5%, EBITDA margins contracting to 7% due to cost overruns. Order inflows were weak, growth of the 6%, and while the company and the management is highlighting that there will be a gradual recovery, we believe that there is some cost challenges and the weak infra profitability going ahead. So hence we have a sell rating on Thermax with a target price of about 3,000. I think that is something that has come down after the Q3 numbers. What we like in this space, I think Larsen is something that we prefer in this space. Outlook remains pretty strong, supported by mid-teens order inflows, strong visibility, especially in the Middle East, where the management expects about 10 to 15% annual growth over the next 5 years. We also expect good, strong order inflows in the thermal BTG projects. Some of the order wins from NTPC, Adani Powers, that is raising the future growth opportunities. So overall, we believe that the risk mitigation framework that L&T has for the mega projects, plus the growing international diversification, adds to the overall positive view on L&T. So there we recommend a buy with a target price of 4,500.
Siddhartha, hi, morning. So at Motilal, how have you all assessed Interglobe Aviation, where the stock is right now and the news flow? And what are you all advising shareholders?
Yeah, Rima, hi, good morning. I think a lot of news flows, there is definitely a guidance cut for Q3 by the management. So what we see is that definitely in the near term, because of the uncertainty and the disruptions, there could be a pressure, some of which is already in the price. So we are expecting the stock to consolidate for the near term. The long-term growth triggers definitely are there with the large fleet size additions over the next few years, the expansion in the global markets, and the market leadership that they have. So I think bearing the near-term uncertainty where the stock could consolidate or remain under pressure, I think long-term investors could continue to hold the stock, while short-term investors could look to diversify into some other avenues.
Okay, so if you are a shareholder, continue to hold, but would you recommend buying at 4,800 or not yet?
Yeah, Rima. So I think buying or adding new to the overall Interglobe, we would wait for Q3 numbers where the bulk of the pressure is taken off. You have heard about the government asking the company to give additional, some remuneration to these people who have got suffered. So those additional cost pressures could be borne in the Q3 numbers. So I think once that is clear, there will be more clarity on the growth ahead.
Siddhartha, big IPO opening out today. ICICI Pru AMC will be speaking with the management as well shortly. They are huge, right? Right now, in terms of average quarterly assets, they are the largest. And they have a large equity share, and having more of equity assets under management usually is, very profitable as well. What do you think? Subscribe, avoid, and what about the pricing at which they're coming?
So, unfortunately, we are one of the lead bankers, so I would avoid giving any.
Okay. So you won't take this one. Let me ask you. Okay.
Rima, should we revise just the basic offering? I mean, Okay, I
Okay,
think
we'll do
we'll
it
do it
just
a little.
just
We'll get the graphics up in just a bit.
But, all these companies have been humongous wealth creators, right?
Yeah.
I just was noticing HDFC AMC has a market cap of 1 lakh.
13,000.
1 lakh,
13,000, 14,000,
crores, right?
Yeah.
SBI Mutual Fund is the leader, of course. I mean, I think about 11 lakh crores in assets under management. ICICI is about 10 lakh odd crores.
Yeah.
But as you said, Surabhi, what matters is equity AUM, because
Yeah.
in debt assets, you make very little money.
So SBI is larger in terms of AUM compared to HDFC, but in terms of actively managed, ICICI Pru is larger than SBI, and plus
Because
in terms
SBI
of
has, I think, all that NPS, etc. as well,
Yeah.
and they have.
and some accounts are dormant where you haven't seen action for the last 12 months, but because they have a large equity exposure compared to the rest, the largest, their profitability is also higher. But we'll discuss that. I think.
Large equity exposure and the fact that active assets, like
Active
you're
assets
saying,
is
versus
the
passives. Passives, you don't make money as a money manager.
But-
There's a few basis points here and there, but active fund management is where the money is.
Well, I think it's one of the best businesses, right? It's like you can have 10 people to start with. What are the costs, right? Costs are people and distribution, mainly.
Yeah.
Right? And you can have 10 people managing 100 crores, 10 people managing 1 lakh crores, 10 lakh crores, whatever. I mean, obviously, the size increases, but it's so non-linear, the cost that you got to put in, and of course, I mean, the profits that you can make. That's why it makes it so attractive.
Are any of these stocks in your coverage? Shakti Pumps, Premier Energies, and Neogen Chemicals.
So I think only Premier Energy is something that we cover. So if you look at the overall renewable energy space, the capacity expansion that they have been doing, that is something that has been a good growth story. But in terms of sentiments, I think there has been a lot of flip-flop, especially from the US, and that is leading to some sentiment change. Otherwise, what we believe is that some of these companies, both Premier, Vari Energy, we believe these are good companies from the long-term perspective, especially given that there is a lot of focus on renewable energy, and these companies have been adding capacities, which is leading to the growth.
What about Honasa Consumer? They've marked their entry into the growing men's personal care and grooming market. They've acquired Reginald Men's for 195 crore rupees, but Mangalam was telling us that the TAM of men's grooming is 20,000 crore rupees. This is a fast-growing acquisition. I mean, your reading?
Unfortunately, we don't cover Honasa, so I would not have any specific views on that space right now.
Okay, that's Honasa, but related space, Swiggy. Siddharth, there's been so much of debate. By the way, I read something which said that this 10,000 crores they are raising, one criticism, it was one of the brokers, I don't remember who, one criticism was that a lot of this is probably going to go in customer discounting. All the cashbacks and the offers will come back, not necessarily fresh customer acquisition or, going into the expansion of the business. Your thoughts on Swiggy right now?
Yeah, I think some of those expectations is unwarranted. We have seen the worst phase of discounting over. I think the entire sector, especially if you look at even Zepto, which was leading to some of these discounting, is now looking for an IPO. So they are focused on profitability. So I think the competition is definitely there, but it is much more matured in the sense that bulk of these funds that has been raised will go towards a calibrated capex expansion. Among the two listed players, I think there is much more room for upside in Swiggy, given that this company is now transitioning towards profitability, supported by an operating leverage, efficiency in the food delivery business, and Instamart, the GOVs improving on a sequential basis. So even we expect that the Instamart to achieve break-even by the first quarter of FY27, which should lead to much more re-rating going forward. And yes, there is some competition which is intensifying. Swiggy's execution, strong capital base with the fundraise, that keeps him much more stronger in that sense. So we like Swiggy. We have a buy rating and a target price of 550.
Okay, the war chest with these quick commerce companies. For Swiggy, it stands at 17,000 crore rupees. For Eternal at 18,300 crore rupees. And for Zepto, according to reports, at 8,500 crore rupees. But